Financial markets are relatively quiet this week so far as investors are generally cautious ahead of earnings sessions, as well as the European Central Bank meeting later in the week. Major U.S. indices closed mildly lower overnight with the Dow down 0.41%, the S&P 500 down 0.32% and Asian equities are mixed. In the currency markets, major pairs and crosses are stuck in tight range today with mild strength in the dollar and mild weakness in the yen. In the U.S., Richmond Fed Lacquer warned again that attempts to overstimulate real economic activity via monetary policy can instead run the risk of raising inflation, and the Fed's monetary policy stance needs adjustment. He noted that there are risks for the Fed to fall behind the curve in 2014 and beyond. He warned that the use of the 2.5% inflation forecast in the Fed's new threshold scheme risks seeing inflation pressures emerge. And it would be that inflation expectations in our forecast lag behind actual inflation pressures. Lacquer urged the Fed to shift from buying mortgage-backed securities to long-term Treasury securities as soon as possible. Also, he reiterated that mortgage-backed security purchases are a form of fiscal action and credit allocation and thus disadvantage other classes or borrowers. The European Central Bank meeting will be a major focus this week, and while it's generally expected that the central bank would refrain from cutting rates this month, there are talks that it could eventually cut rates within this quarter. According to a poll by Reuters, more than a third believe the ECB will cut rates to 0.5% by March. A major concern is that a cut in main rate would either be accompanied by a cut in the deposit rate, currently at 0, into negative territory, or narrowed the spread. ECB President Draghi has expressed that both are unpreferred options already. However, as weak Eurozone economic data in Q4 suggests that recession could extend into Q1 even though it might not deepen. The ECB could in the end be forced to do something to stimulate the economy despite opposition from core countries like Germany. Draghi's post-ECB meeting press conference will be closely watched this week. In Japan, it's reported that the Bank of Japan will consider additional stimulus at its January 21st to 22nd meeting, and might even double the inflation target from 1% to 2%. Japanese yen has been deeply sold off since the new Prime Minister Shinzo Abe pushed for a 2% target. And selling intensified as the Bank of Japan expressed its intent to review that price goal. Also, Abe has been pushing for bold monetary easing to revitalize the Japanese economy, and these have been priced in the markets. While the trend in the yen is still bearish, it might take something really strong from the bank to impress the markets to accelerate the yen sell-off, like open-ended asset purchases, or eliminating the 0.1% interest rate floor on deposits held at the central bank by commercial banks. On the data front, UK BRC shop price index